if you short here, we're literally in the middle. This is what you call the middle of nowhere. It's no man's land. You have no edge in either direction, right? Because the price could literally go between these two lines up and down. So if you're opening a trade here, it's the same thing as going to the casino right now, going to a roulette table and betting on red or black. It's the same exact thing. You have no edge. There's no edge in either direction. So I wouldn't take a trade right now at the current price because you have no edge. You want to always take a trade with an edge. So let's say you have a 55% edge that you're gonna win and a 40% edge, a 45% edge that you're gonna lose. Although it's very small, it's still an edge. So over the long term, you're going to make money, right? Even though you're still kind of only hitting 50% of your trades, but because you have a slight edge, you're still hitting a little bit more than you're losing. You're going to make money, right? You're gonna win more than you lose. So that's kind of the thought process that you have to be in when you're looking for an entry. Right now, there's no entry here. This is in the middle of nowhere. This could go up just as likely as it could go down. So it's honestly a toss-up. Who knows which way it's gonna go, right? This is only from the perspective of where the price is, right? I'm only speaking from a technical aspect of exactly where the price is, from looking at the chart and looking at support and resistance levels and knowing its history, right? Look at any time when you look back, when it's been in this zone, look at the price. The price has went to the top, came to the bottom, went to the top, came to the bottom, then kept down, right? So if you would have taken a trade here in either direction, you had a 50-50 shot because who knows which way it was going to go. Let's say you would have shorted it. Let's say, right? Let's say that let's zoom it out a little bit. Let's say you would have, when it dropped down here and it bounced back up, you're like, okay, I'm going to go long. And you went long and then the price dropped, right? So you saw it drop and it came back up again and you're like, okay, this time I'm going to short, and you entered that same trade there and the price kept going up. And then it dropped and it came back up. Now what are you going to do, right? This time, because it could go in either direction. So you're going to just be kind of taking stabs at it in one direction or the other, not really knowing which way it's going to go. So instead, what you do is you play the levels, right? If you would have entered a trade as soon as it broke through the support, you would have been able to ride it all the way down, right? With the short. If you would have, again, shorted, if you would have entered a trade once it bounced back up here at the support level, you could have rolled this all the way to the top. Once it got to the top, if you would have shorted it, you could have rolled this all the way down here. You know what I mean? So those are higher probability setups. It doesn't mean that they're always going to work, but it means that you have an edge. There's a higher probability that you're going to have a successful trade. So that's why I say right now there's no direction. The price could go in either direction. I wouldn't open up any new trades here. If you already have a trade open, that's different, right? So for example, for myself, I opened a trade right here. I've rolled this trade all the way up here. I've taken profits already. So I've already taken profits and I'm up from 2,500, right? So I'm up $200 from my entry. So I'm okay with the trade dropping back down. You know what? I'll add back on if it goes down to the support. I'm not opening up any new trades though.